Hey everyone, welcome back to another edition of What's in My Insurance Policy. Today we're going to talk about cancellation. So why would anybody cancel their policy? Well, what typically happens is we'll have a prospect. They'll come to us and say, hey, can you review our policies? So they send us a PDF of all their policies. We review them. And what typically happens, I would say 95% of the time, if not more, is that we find significant coverage issues. So either something is not insured that should be, or it's underinsured. So there's minimal coverage, leaving them with a huge exposure that they're going to pay out of pocket if there's a loss. So the client then says, or prospect will say, well, how do we fix this? So there's two ways. First, we go to the insurance carrier, their current carrier, and say, can you fix this? Here's the issue. Do you have the capability and the willingness to correct it? If they say fine and yes, great. No need to cancel. We make the corrections. If they say no, then we say, well, we're going to go to market. We're going to find a solution. And when we do, we will need to cancel this policy. So when we cancel the policy, there's going to be what's called a short rate penalty, because us as the insured canceled it midterm, we incur a penalty. So what does that look like? So let's say you canceled it exactly halfway through. Instead of getting 50% of your premium back, you would incur a 10% penalty, more or less. So you might get 40 or 41% back, and the insurance company would take that delta and use it as a penalty. So we see that when you cancel. But what happens if you cancel because you had one vehicle, you sold it so you didn't have any auto exposure, or the insurance company cancels because for some unknown reason? In that case, when the exposure disappears and there's no need for the policy, or the insurance company cancels the policy, it's done on a pro rata basis, which is, using that same example, you cancel it on the halfway through the policy period. In that case, you would get the 50% back. There'd be no short rate penalty. Now, there's a third issue that isn't always talked about is, well, let's say I find out that there's these coverage issues early in the policy period. In the first month. Well, and this isn't going to apply to all policies, but there might be a minimum earned premium. And we'll see this typically at 25%. And what that means is, regardless of when you cancel, so if you cancel in that first month, the insurance company is going to retain 25% of the premium. So if your premium was $100, they're going to keep $25 no matter when you canceled it within those first 3 months. After you get to 3 months, you're obviously 25% of the way through the policy period. Then it's a moot point. But it is something to be aware of. Now, I have clients and prospects that say, I don't want to pay that money. I don't want that short rate penalty. Well, then the question becomes is, how big is this coverage gap, and what happens if you have the loss? Before we make the change, what will that penalty look like? Because we can't put a number on it, but we know it's probably going to be larger than the premium, the short rate penalty. So it isn't always so cut and dry. I know people hate paying penalties. It's a psychological barrier. A lot of studies have been done on it. But you also have to think about what happens if I have a loss in this time period, because it can be significantly more than any short rate penalty. So, like most things with insurance, nothing is binary, nothing is cut and dry. There's multiple ways that you can cancel a policy, and multiple ways of how you're going to get your money back, your premium, if you cancel before the end of the policy period. So I hope this helps. Questions, comments, let me know. You want to see if your policy's in tip-top shape? Reach out. We can do a policy audit for you of your whole program within 7 days, usually. So thanks for listening, and we'll catch you next time. See ya.